Hey everybody, I hope you're all doing well. In this video, I'm just going to be covering my three most utilized ICT confluences or ICT concepts that I implement into my three-step distribution model, which has gotten me over an 87% win rate in the month of March. This month has been a little bit slow for me. I've only taken 2 trades. I've gotten break even a couple times as well, but now's a good time to, if we're ignoring tariffs and stuff like that, just hit the books, study, right? So the main reason I like to make these sort of videos is because I like to show that trading doesn't have to be complicated. Okay, you can create objective outlines with objective definitions of those outlines to create a very simple trading model. If you're looking at the charts day to day and you don't know what to expect and you don't know what you're looking for, you're not going to have very consistent trades. If you're utilizing different PD rays differently every single day, how do you expect to have any form of consistency? You really can't, okay? You really can't. So that's why I like to make these styles of videos, is to show you not just the actual tools that I use, but the reason they're important and how I structure them and why my results are so good, right? It's also the reason, my students learn it so quickly. One of my students was in my Discord server for 2 months and he's hit a 10K month already because trading's not complicated. You're just following rules. The learning curve should be learning the language and, figuring out what those tools are. Okay, and if you want to know more about the Discord, you can join with the link in bio. But let's go ahead and get started. Let's dive into it. What is my first favorite ICT concept? And that is liquidity. Okay, to me, liquidity is high time frame fair value gaps, so internal to external liquidity. You guys are familiar with that concept, and high time frame highs and lows as well as session highs and lows. As I said before, trading can be simple if you have specific criteria for your concept or how you're going to implement it into an overarching model. Liquidity, if I traded this differently every single day, and one day I'm taking a sweep on my 5 minute or an internal high, and 1 minute I'm taking it on the 30 minute, next day I'm only looking at the 4 hour. Again, how does that tie into consistency if I'm using liquidity differently every single day? It's not. Yes, you're using the concept of liquidity, right? But what is the consistency behind that? And as I said before, if you don't have these defined criteria and an outline for what you're going to be targeting using the concept, it's hard to expect consistent results, okay? So for me, liquidity is important because it's key levels, right? It's areas to identify where the market could potentially be manipulating from, whether that be we sweep out a previous high time frame high or a session high or low, whatever the case may be. It's also a way to place my take profits. I literally just place take profits at session highs or lows, or if we don't have those, just a swing high or low from our manipulation. Okay, so it goes both ways. It's a take profit area, and it's an area where we are manipulating from and we can enter using this concept. Okay, and again, I'm kind of just saying the same thing over and over again here, but specific criteria. I don't trade these on different time frames, or I don't use it differently. Objectiveness, excuse me, is what's going to carry you the furthest. Okay, so that's my first favorite ICT confluence. Now, what do I like to pair this with? I like to pair this with an SMT divergence. An SMT divergence is when, it's in the name, you have diverging market structure. Ooh, sorry, it's kind of hard to draw circles. I'm on the hourly time frame, but on your with your correlating asset pairs. Okay, so in this case, I have some pairs written out here. Let's imagine the left is NQ and the right is ES. You're supposed to have similar market structure or correlating market structure, meaning that you're putting in the same highs and lows and the chart is moving the same. SMT is when one puts in a higher high and the other one doesn't. Okay, there is a divergence between your correlating asset pairs. And I have an entire video on this, so I'm not going to dive too deep into it. But once you pair this with your liquidity on your high time frame, it's really helpful for filtering out low probability areas of liquidity and versus high probability, right? Which sweeps are more likely to happen versus which sweeps are more likely to be valid versus which sweeps aren't. Okay, and by simply adding another confluence on top of my first confluence I talked about, which is liquidity, you're just going to get higher probability. Okay, and again, consistency. I'm going to say this 10 more times throughout the video. I use SMT and key levels the same way every single day. If it doesn't appear the same way and it's not under the same criteria in the outlined structure I have, I'm not going to trade it. Okay, so your key level and SMT, those are my two, they're without key level SMT, I wouldn't trade my three-step distribution model. It wouldn't be a thing. Okay, so this is my second favorite ICT confluence, and I'm going to show you an example of how to find SMT on the chart later, and you guys can also check out my SMT video on my channel. What is my third favorite ICT concept? The open high-low close. Again, I have a video on this on my channel as well, but the open high-low close is so crucial for trading or for my model because it aligns the high time frame and the low time frame. Again, consistency. If I'm trading using my high time frame highs and lows to identify my manipulation, what is the connection between my low time frame entry and my high time frame? And the answer is the open high-low close. This is how I am able to catch the lows of the hourly candle if I want longs, and how I enter at the top of the hourly candle if I want shorts. It's because I'm aligning my high time frame bias by anticipating if my next high time frame candle is going to be bullish or bearish, and then I can capitalize on the internal manipulation for your open low high close or the open high low close. Right? So that's why the open high low close is important. And again, I'm not going to go too in depth into this video because I do have the other time and price based video where I, run through this basically more in depth. Okay, so let's go take a look at the example now. I have all of the confluences laid out. Now my three-step distribution model does have some more criteria, but this is just, again, I'm just trying to show you the simplicity of trading and that trading doesn't have to be hard for you guys. It's objective criteria, following objective rules, consistency. Okay, I'm gonna say it. It's crazy how many times I'm gonna say that. But what is my first step? Like, what am I looking for using my confluences? Well, you guys know I always look for a high time frame key level and an SMT to identify bias. Okay, if you remember what I talked about with my first confluence, key levels are high time frame highs and lows. We're on the hourly chart right now. We swept out a previous hourly low and we paired that with an SMT. I'm trading this objectively, right? This is just my rules. I'm just following what I'm looking for. We swept out the previous hour low and we had an SMT, right? So I can now implement my third favorite ICT confluence, which is the open low high close, right? If we look at when this hourly candle opened, should be somewhere over here. What do we see happened? We see the hourly candle opened, manipulated lower into our high time frame key level and SMT, and then we get our change in state of delivery later in the hour. So what does this tell us about our manipulation, and what does this tell us about where we're targeting using our liquidity and SMT? It tells us we're likely heading for buy side liquidity if we get our internal confirmations, which was that change in state of delivery, right? It can be that simple. Trading doesn't have to be hard. I'm just following objective outlines that I talked about before in the video with the outline of the confluences, but you guys just have to implement this systematically, and you can start to see some crazy results like my students and myself, right? So I've just simply followed the rules of my trading plan, and as you can see, our draw on liquidity was hit, right? We used liquidity to identify our manipulation paired with our SMT. We used our liquidity to find our draw on liquidity, or sorry, that sounds repetitive, to find our take profit. And then all we did was find our internal confirmation aligned with our open low high close, and we have a trade setup, we have a model. Okay, and you can trade this the exact same way every single day. Now, getting into, again, I'm just trying to make videos to preach consistency. If you're trading liquidity different every single day and you're trading on the 1 minute, what does this look like on the 1 minute? How many different liquidity sweeps do we see on the 1 minute here? Is this a sweep? Is this a sweep? Like, how many different liquidity sweeps can we see on a low time frame? If we're trading this differently every single day, how can you ever expect to get consistent results? And you guys might be annoyed with me by now for just preaching that so much, but truth is that's what's going to take you to profitability. That's what's going to grant you long-term results. If you're trading something different every single day, you're going to see different results every single day. So this video wasn't meant to just be an outline of the actual terminology and the ICT concepts, but it was just to preach the importance of simplicity and to make sure and to embed the idea in your guys' head that, I mean, without rules and criteria, you're not going to get too far with your trading. Just to be completely blunt with you guys, okay? And that was pretty much the entire video from me. If you have any more questions or any comments, feedback, please let me know, and also feel free to join the Discord with the link in bio, and I look forward to talking to you all there.